Welcome back to the program. It's Capital Market Live on Channels TV. Before the break, we were analyzing the new par value rules and pricing methodology of the Nigerian Stock Exchange. And that has been made possible for us by Olumayowa Sunday, the head of investments at Helix Securities. Thanks a great deal for standing by, my brother. But let's take a look at the overall impact that this is meant to have on the market as a whole, equity market as a whole.
Okay, the overall impact can be looked at in one of two ways. One, it's going to impact the capitalization of the affected companies because over time, if you observe your prices are no longer traded at 50 kobo, probably they are trading lower. If you factor that with your share outstanding shares, potentially your market worth is going to be reduced. Potentially also the market capitalization of the exchange is also going to be affected. That is in the immediate short term. But overall, the picture, what the exchange hopes to achieve is to drive liquidity in some of these rather dormant stocks. So in the long term, it's possible some of these companies might recapitalize. It's possible core investors can see opportunities in some of these companies and be encouraged by virtue of the fact that, the prices are now close to their true value. The companies are not close to their true worth. They want to probably now put a stake, hold a stake in those companies. And ultimately, that bodes well for the shareholders. So in the immediate term, you can definitely see a negative impact on the holders of those shares. But in the long term, the exchange, the idea the exchange is trying to nurture will bode well for all stakeholders in the system.
Let's go back a little bit.
Okay.
Chams PLC, for example, is trading at a par value of 50 kobo. Wake up on Monday morning, look at the numbers on my mobile, and I'll be finding what on Monday in relation to Chams PLC?
You can be finding 45 kobo. You can be finding 47 kobo. Again, they are bands that a stock can naturally move within a trading day. So subject to those bands, and again subject to the tick amounts and all that, you can see Chams trading at 48 kobo, 47 kobo, as the case may be, on Monday. Again, that's not a cause for you to panic, really. If you are able, because if you've held those shares for God knows how many years, but then you have an opportunity now to exit and probably do something else, with position in other stocks with the same amount of money, you are still better off in the short term, definitely.
So are you trying to say that more companies that have been trading at the old par value of 50 kobo will now get more traction?
Yeah, that is actually the ultimate objective of the exchange. Again, we must not lose sight of the fact that the exchange has removed that par value conversion. It doesn't mean a stock can still not trade northward. Again, it's about fundamentals. If your fundamentals are good and the investing public, you have the information flow regularly and people can buy into the vision and the product and service of the company, definitely the fact that the par value provision has been withdrawn doesn't mean your stock can still appreciate in value. Definitely not. So it's both ways, definitely both ways.
Okay, let's look at the closing figure for Monday. Let's just project that now, preview it. How will it be determined? If, for example, stocks opened for 45 kobo from 50 kobo that they closed as at Friday, what will now become of the closing figure in terms of how we will determine the prices of equities generally in light of this new rule?
Okay, the closing, I'll look at that closing figures in two perspectives. Number one, you still have highly capitalized stocks in the market. So sometimes if a stock like Dangote Cement should appreciate, let's say, by 5 naira on Monday, that singular appreciation may probably crowd out whatever losses we are going to be seeing on some of these lower, par-valued entities. But nevertheless, one thing we must also appreciate is the fact that prices can, for the bulk of the companies affected, they are going to be the insurance companies. The insurance, NSE insurance is going to be the biggest brunt of because close over 17 stocks out of the 23 insurance companies that are stocks holding in the market actually closed on Friday at 50 kobo. But then it won't happen within a single day. Of course, you expect that throughout next week, you are going to be seeing gradually investors are going to be warming warming up to that new arrangement, trying to see how it works. So you may not see it immediately crashing, if I can use that word, the valuation of the capitalization of the constituent stocks in the NSE Insurance Index. But nevertheless, over time, as the investors begin to try to warm their way into this new initiative, then you should definitely begin to see that contraction in their capitalization, talking about the insurance component of the financial services subsector.
So let's look at the fact that quite a number of investment houses like yours and others now do mobile and online trading for investors, shareholders, as it were. And I, for example, I'm not going to tell you the name of my broker anyways. I look at my numbers on the phone, on mobile. How will all of that, sync with what we have in this kind of technological, integration into the market that we've seen over time?
Okay. For a lot of investors that are already trading on their internet-enabled devices, the onus is on their brokers or their dealers, as the case may be, to update them on this market development.
So we should be seeing a lot more investors clinic.
Yes, definitely. You can probably have a lot of dealing member firms that are actually putting information on their portal on some of these things. Some are sending updates to their clients. So number one is the fact that investors need to be, traders on the fixed platform need to be updated on this information, such that on Monday they don't try to key in some trades and realize because they evaluated the new arrangement, the new pricing methodology now, they just realize their trades are not matching on their devices. So that is going to be very, very key. Another key implication is that for negotiated deals, just like you mentioned earlier, there will be a need for more sensitization, especially on the part of counterparties, wherein a particular transaction has been previously agreed upon before this the new order, the new arrangement is kicked off. So basically, you need to have that engagement with the larger investing public for them to be in on board on what this implies. But
are we likely to see subsequent reclassifications from the stock exchange? I know you're not a regulator, you're an operator, but is there likely to be anything like that?
Well, the market continues to be a dynamic market. The exchange, we believe the exchange will always review developments vis-a-vis some of these pronouncements. Over time, they will do the needful. If they think there should still be further classification, like last week, the exchange did mention that for companies that are on suspension, like Oando, like on technical suspension, a completely different classification will be made for them, such that this the current arrangement, because you can't actually place them in category B or category C right now. So definitely over time, the exchange will do the needful on areas like that.
Head of Investment at Helix Securities, Olumaya Sunday, it's been a pleasure having you on Capital Market this evening. Thank you so much for coming through. We do hope to have you around again.
Thank you very much.
And that's the show for this evening. Thank you for being a part of it. We appreciate your time. Let's continue the discussion on Twitter at Channels TV and at CTV Tempele. Thanks for watching. See you next time.